Hi everyone, welcome back to Corporate Decoder. Today we are diving into the Janel Corporation's latest quarterly report. It's a bit like unwrapping a gift you suspect might be a pair of socks, but hey, maybe there's a gift card tucked inside. The company's hauling in more revenue, but is it actually making more money, or are they just running faster to stay in the same place? Let's find out. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for even deeper dives. This is Janel Corporation's report for the quarter that ended in March of 2025, covering how they did in those 3 months. Janel operates in 3 main areas: logistics, which is moving stuff around; life sciences, dealing with medical research; and manufacturing, where they make equipment. First off, the report tells us how many shares of common stock are out there. As of May 9, 2025, there were about 1.19 million shares. This number matters because it helps calculate earnings per share, a key measure of profitability for stockholders. Jumping into the financial details, the balance sheet gives us a snapshot of what the company owns and owes. A big number to watch is accounts receivable, which is money owed to Janel. It stands at about $36 million, up from roughly $34 million. This means Janel is doing more business, but also waiting longer to get paid. Let's head over to the income statement, which shows how well Janel performed. Total revenue was about $51 million for the quarter. This is an increase compared to the same time last year, where revenues were roughly $42 million. So Janel is bringing in more money. The company's gross profit, which is revenue minus the direct costs of providing services, was about $16.6 million. This is also up from around $13.8 million the previous year, indicating Janel is not only selling more, but also managing its cost of services effectively. But what about operating income, which is what's left after all operating expenses? It's about $2.22 million. That's way better than the roughly $600,000 from last year. So their core operations are making more money. Ultimately, net income, that's the real bottom line, was about $1.4 million, considerably better than the $200,000 from last year, meaning the company is taking home more profit after all the bills are paid. Digging deeper, let's look at earnings per share, a key figure for stockholders. Basic earnings per share was $1.12. This is a big jump from just $0 war profit folder. The company also calculates the diluted earnings per share, which considers the potential dilution from things like stock options. This number is $1 just a tad lower than the basic EPS, indicating a small potential impact from dilution. Switching gears to the cash flow statement, which tells us where the cash is coming from and where it's going. Cash from operations for the past 6 months was $7.1 million from last year. This means Janel is getting better at turning its business activities into cash. Investing activities, where they buy or sell assets, used up $1.7 million. This is comparable to the $1.6 million used last year. And finally, financing activities such as borrowing or paying back loans used up $4.1 million, which is more than the $3.1 million from last year, showing the company is actively managing its debt. All in all, Janel ended the period with $4.4 million in cash compared to the $2 million from last year. So the company's cash position has definitely improved. Looking at stockholders' equity, Janel has preferred stock, which is a special type of stock that gets paid dividends first. The company's accumulated earnings, which are profits kept over time, were $4.8 million last year. Good sign. Delving into the details of intangible assets, things like customer relationships or brand names that are not physical, the amortization expense or the process of writing them off over time was $1.3 million. Then there's goodwill, which is kind of an abstract asset representing the value of a company's reputation. Goodwill stood at about 23 $dollars Ray. Janel's investments in marketable securities, which are basically stocks they can easily sell, were valued at $2.5 million. Regarding debt, there were proceeds from the term loan of around $4.2 million and repayments of the term loan, which offset each other. It's important to watch how companies manage their debt. The company also has long-term operating lease liabilities, which is the amount they owe for renting property, around $6 million. The company mentions they are sometimes involved in legal issues, but they don't expect any major problems from them. This statement is fairly standard boilerplate. The company's common stock commenced trading on the OTCQX after previously being quoted on the OTC Pink. This is an important step forward to grow the price and accessibility of its stock and shows compliance with higher standards. Now, zooming out and looking at the big picture, Janel seems to be heading in the right direction. It's got some momentum in revenues, managing expenses well. However, it is important to note that it has taken more debt to continue growing, but hopefully it can continue growing to offset any of those issues. All in all, Janel appears to be a company with potential, working on getting better at what it does while continuing to grow. That's our quick take on Janel's latest report. What do you think? Any surprises in those numbers? Let us know in the comments. And if you found this helpful, give that like button a tap, subscribe for more, and don't forget to check out our Discord community. Thanks for watching and see you in the next deep dive.